Welcome to the world of Tesla, where electric car costs are dropping at a rate that beats even the predictions of Johnson industry analysts. Analysts and investors have been deeply divided over Tesla's price reductions, leaving many perplexed and unsure of the company's long-term strategy. There are those who surmise that Tesla's pricing reductions are a reaction to heightened rivalry. In this video, we'll examine the rationale behind Tesla's recent price cuts, their effects on the industry, and the surprising timeliness of the average investor's loss of access to Tesla stock. Some people think that these price reductions are part of a larger strategy to seize a substantial portion of the electric vehicle market. I can't wait to discuss this in more detail, but first, let's destroy that like and the subscribe button. Investors and industry analysts have been debating Tesla's recent price reductions extensively, with some speculating that the company is reacting to heightened competition in the electric vehicle space. Some contend that they're a part of a long-term plan to seize a sizable portion of the market, but a recent piece suggests that the latter is more accurate. Tesla's aggressive price reductions were a long-term strategy to achieve the company's goal of selling a whopping 20 million electric vehicles annually by 2030, not a reaction to the competition. Although this is a very ambitious target, Tesla's management team is convinced that the company can accomplish it. They believe that their industrial size and advanced production methods will enable them to maintain cost leadership, which will be the key to their success. Although Tesla is able to manufacture electric vehicles at a cheaper cost than many of their rivals, affordability is essential if the company hopes to reach the 20 million unit annual sales volume. For this reason, Tesla is rapidly lowering its prices, not to compete with other electric vehicle manufacturers, but rather to increase the accessibility of their products for a larger market. By doing this, they intend to solidify their position as the industry leader in the electric car sector and take a sizable chunk of the steadily increasing market for environmentally friendly transportation choices. Let's examine the current state of affairs at Tesla. Tesla has emerged as the leading premium car brand in the US, according to registration data that Automotive News gathered and shared. With 491,000 registrations in the US for 2022, this is the first time a US automaker has been in this position in 25 years. Tesla has surpassed Mercedes at 286,764 and BMW at 332,388. Volvo is followed by Lexus, Audi, Cadillac, and Acura. While Tesla's demand has been a source of concern for some recent price increases, this noteworthy accomplishment can be ascribed to the company's manufacturing ramping this year, which allowed them to comfortably enter this top rank with over 100,000 more vehicles registered than their nearest competition. Since the end of the previous quarter, cuts have both encouraged and caused alarm in certain groups. In an apparent attempt to clear inventory while consumers awaited information on the upcoming tax credit, Tesla was offering discounts of up to $7,500. Tesla began decreasing pricing in China while the tax credit details were still being revealed and the Model Y was no longer eligible. At the start of January, Tesla abruptly cut pricing, bringing them down to the equivalent of $7,000. As a result, the Model 3, which was previously their cheapest car in China, was reduced to 13.54 to 229,900 renminbi, or $33,417 and 16 cents. In China, the Model YLR also decreased, going from 13.41 to 45,118.37. It's evident that Tesla is keeping up its innovative streak and making calculated decisions to maintain its position as the industry leader. Even if some of the changes, like the choice for a circular steering wheel, might seem little, they demonstrate that Tesla is paying attention to its customers' needs and acting accordingly. Tesla has demonstrated that it is always seeking for methods to stay out of the game by lowering prices when necessary and by becoming the leading premium auto brand in the US. It will be intriguing to observe what additional decisions Tesla makes going forward. While there have been notable price reductions for the Model 3 RWD, Model 3 Long Range, and Model 3 Performance, the Model Y has seen the most startling decrease in pricing. Tesla reduced the price of the Model Y by 20%, from $65,990 to $52,990. For $45,490, you may now purchase the base Model Y, which was not qualified for a tax credit before. The Model Y is now more inexpensive than ever thanks to this modification, which is a huge win. Additionally, Tesla has lowered the cost of the Model S and Model X, with the Model S Plaid being the most affordable vehicle to date. Some individuals feel that Tesla has a plan behind this shift, while others say the business is just having trouble keeping up with demand and needs to lower pricing. Tesla will increase sales by passing on these cost savings to the buyer through the purchase price, which they have managed to reduce. As a result, part of their plan included cutting the price of their cars because they realized they couldn't continue to sell an increasing number of Model Ys every quarter at $66,000 in the end. While price reductions are good news for prospective Tesla buyers, those who have already bought a Tesla feel like they've been dealt a serious blow to the face. It's also important to note that the price drop means that many more people can now afford to buy a Tesla, which is great news for the future of EVs. Tesla's decision to lower prices is a combination of addressing a demand issue and carrying out their business plan. Although this is a great move for the company, it is frustrating for those who recently purchased a Tesla and significantly reduces the value of their car. Despite this, the long-term effects of the price drop were positive since more people could now afford a Tesla. Cheaper EVs are what we want, and that is the ultimate goal. One of the reasons for the price drops was that most trims did not qualify for the tax credit. Why Tesla didn't cut pricing gradually rather than all at once is beyond me. By doing this, they may have increased revenue for the business while also ensuring the satisfaction of their clients. Though the unexpected price reduction is surprising, it does imply that Tesla can now undercut its rivals, giving their cars a more appealing alternative to more individuals. It's important to keep in mind that Tesla has always been a business that operates in a highly dynamic and unpredictable market, even though this move is not ideal. Anything can suddenly change. Despite the short-term annoyances, it's great that Tesla is making EVs more accessible to the general public, and it will be interesting to watch how this will impact the company in the long run. What does this mean for investors, given that this move is a major step forward for both Tesla and the future of EVs? Because they prioritize affordability and cost leadership, Tesla's price reductions are actually a good indication for the company's long-term prospects. If Tesla is successful in gaining a sizable portion of the electric vehicle market, you will be able to profit from your investment. Some analysts project that Tesla will sell 20 million electric cars annually by 2030, which puts the company's share price at $310.61. Even while this might sound like a big objective, Tesla has already made a lot of strides in the direction of achieving it. They sold more than 1 million electric cars in 2022, and the total is predicted to rise sharply in the upcoming years. Recent price reductions by Tesla are a strong indication of the company's supremacy in the electric vehicle market. Markets. Do not focus on affordability and cost leadership as a way of responding to competition. Tesla is putting itself in a position to succeed over the long run, which could eventually pay out handsomely for investors. That concludes our discussion of the most recent events and news surrounding Tesla, including its aggressive pricing. Although investors and industry experts have been talking a lot about cuts, it's evident that Tesla has a long-term plan in mind by putting affordability and cost leadership first. By 2030, Tesla wants to sell an astounding 20 million electric vehicles annually. With their recent success in rising to the top of the U.S. luxury auto market, it's evident that they are well on their way to reaching these targets through consistent innovation and calculated business decisions. Seeing what Tesla has planned for the auto industry's future will be interesting. What are your thoughts on Tesla's most recent move? Tell us in the space provided for comments below. Remember to click the subscribe button and to give this video a huge thumbs up. We appreciate your time and we'll see you in the upcoming video.